Hi, this is Raymond. Looking into 2023, we think there are three issues that all investors should pay attention to. The first one is whether US will enter a recession. Many investors believe that the Eurozone and the UK, they are already in recession. Whether US will follow, that is something we don't know for sure. We think that the risk is quite high and it's quite likely for the US to enter a recession sometime next year, probably in the second quarter. We think that the recession is going to be a very mild one. And the second thing that we all should pay attention to is the rate hike in the US. We all know that by now the Fed has slowed down the rate hike from 75 bips to 50 bips in December. The rate has aggressively increased their rates from almost 0% to around 4% this year, so it's quite aggressive. Although the Fed slowed down the rate hike, we still think that the rates of the US dollar will stay at a relatively elevated and restrictive level for the whole 2023. The last thing that we all should pay attention to is that we don't think the US companies, the estimated earnings of the US companies are fully reflecting the probability of having a US recession. We'll talk more about that later. So what investors can do? We think that they can use GAIN, GAIN, as a principle to allocate their portfolio. There are three parts in GAIN. The first one is G. It stands for Global Defensive Stocks. And the second part is Asia Stocks and Bonds. The last one, IN, it stands for Investment Grade Bonds. And we're now going to talk about them one by one. Okay, let's talk about the first part in GAIN, the G, which stands for Global Defensive Stocks. Well, in this chart, you can see that in the US, the Euro area, in the UK, the growth rates are significantly slower next year if you compare those this year. So the economies are slowing down. And we think that the US is quite likely to enter a recession. But that is something we don't see that has been fully reflected in the stock market. In this chart, the blue line is the estimated EPS of the S&P 500. The peak EPS is in June this year, and if you compare the EPS in June to the EPS right now, it only fell by around 4 to 5%. In the past, during a recession, EPS on average fell by around 8 to 10%. So that is why we don't think that right now the earnings are fully reflecting a US recession. And that's why we think it's quite likely for the US companies' earnings are quite likely to be downwardly revised next year, and that's why we think investors should be a little bit more defensive. And in this chart, you can see that over the past years, when US dollar is strong, normally defensive stocks are going to outperform cyclical stocks. For the next year, although the Fed has slowed down the rate hike pace, we still think that US dollar is going to stay at an elevated levels compared with other currencies. So we expect the US dollar to remain relatively strong, and that's why we think that defensive stocks are still going to be a better choice for investors. Okay, let's move on to Asia. Well, in this chart, you can see that, as we mentioned, that we expect the developed markets to only grow by around 1%. So if you want significant growth, emerging Asia is where you want to be. The IMF expect the emerging Asia to grow by around 5% next year. So within Asia, we think that China is going to still have a very supportive monetary policies and fiscal policies. And at the same time, they are going to gradually lift their COVID restrictions. And for Korea and Taiwan, we think that the markets are still lagging behind most of the other Asian markets. So we expect a rebound sometime next year. And for India and for ASEAN, we think these countries are going to benefit from the multinational companies trying to diversify their supply chain across different countries within Asia. So we think they all have a different advantage. And I think we should also talk about Japan. We said we like defensive stocks, we said we like value stocks. In fact, the Japanese market, the stocks in the Nikkei is actually quite a good value play. You can see the PE ratios is roughly at a level similar to the S&P 500 value, which is quite a bit lower than the broad S&P 500 index. Because in Asia, all these countries, they all have their own different advantages. So we think investors can use funds or use a broad to diversify their asset across different Asian countries to capture growth. Finally, let's talk about investment grade bonds. There are two yield curves in this chart, and the one in green is the one we have right now, and the one in yellow is the one we had around 3 years ago. There are two things that we can see in this chart. The first one is that the US Treasuries, they are now offering a relatively attractive yield to their investors. That is at a level that we don't normally see over the past decade. The second thing that we can see here is that now the yield curve is inverted. That means the US economy is quite likely enter a US recession if we try to see what we learned from the past. So the risk of recession is high, and we would expect the growth of the advanced economies to be slow. And at the same time, we expect the US, the Fed rate will still at relatively restrictive levels. So all these factors, they are not exactly as supportive to the economy, and we expect the default rate of debts to be higher sometime next year. We all know that the high yield bond issuers, their financial conditions are not as good as those that are issuing IG bonds. So we think that IG bonds is actually a better choice for bond or debt investors next year. So we think it will be a good opportunity to gradually add IG bonds to their portfolios, so to manage the volatility and also capturing this relatively high yield. So for the next year, we think investors may find opportunities in these three areas, and investors can use the word gain to allocate assets within their portfolios. I hope this video is useful to you, and thank you for watching.